Hello, everybody, and welcome to episode number 81 of Confessions of a Market Maker. I'm your co-host, Ray, aka All Day Ray, aka Ray Dollars, and I'm joined here by my luxurious co-host, former market maker of 20 years and current day retail trader, a man who used to charge tuition prices to concoct a press release for your make-believe company, the infamous son of Regina, JJ.
Ray, what's up, brother? How you doing?
I'm doing good, man. How are you feeling? We're getting ready for the big move?
Getting ready. Looking forward to it.
Absolutely. Good luck on that. And our guest today has been a professional options trader for the past 10 years, Cambridge graduate, worked at numerous tech startups in Silicon Valley, and then's embarking on a highly successful career at Microsoft, headline speaker at the Money Show in Las Vegas, Nevada, the founder of Options Savvy, an options training company. And with a name like his, it was quite obvious he was destined for a career as a trader. Of course, I'm talking about Steve Hedge. Steve, how's it going?
Hi guys. Thanks for that intro. I'm glad you said headline and not hairline on the Vegas stuff. But,
yeah, I see you got spruced up for the podcast. I appreciate you taking this serious.
I did. I definitely had a good haircut because sometimes, for me, it kind of grows outwards and looks kind of funny. But now you just get the polished, with the lighting. It might blind a few people, but that kind of goes with the territory.
It goes with the territory. I had for the listeners, I had the pleasure of meeting Steve, hanging out with Steve in Las Vegas. I believe September 2021. We had a little equities ETC micro E future room meetup. And Steve, there's this narrative out there, this lore that we had some wild night out in Las Vegas. And I'm sorry to break it to the people, but this legendary night consisted of me and Steve at the bar talking probability theory for like 3-4 hours.
I think we covered exactly the same topic over and over again for like those 3 hours.
It might have just been a loop. Yeah, just what do you remember? What do you remember from that night?
No, I mean, it was, and like you said, it was the first time that we'd met. And I'd actually only been a member of the trading room. I think I was looking the other day and I joined in, I think it was the middle of August. So I'd only been a member of the room for about a month. And so obviously that was our first meeting. And I knew, part of what attracted me to you guys in the first place was I saw Peter Resnicek, one of your early podcasts, and it was funny because when you were interviewing him and JJ was talking about, correct me if I'm wrong, JJ, you saw was it the Shadow Trader Uncovered on Tasty Trade or something back in the day?
Exactly.
And that's exactly where I was, probably about the same time. We were probably watching the same episodes, and,
Probably.
which is just funny. And I was more on the option side at that point, but and I've never really been a technical trader, but the whole market profile stuff kind of made sense to me, the auction style. And so when I heard you guys on the podcast, and Peter was on there, that's how I came into the room or discovered you. And it was just, oh, wow, these guys, there's a lot of synergy. And Ray being a poker player, and I knew options trading and poker, and I was just wondering, wow, does Ray trade options? Like, I think he kind of should, just based on everything that he was saying. And anyway, so that all ended up when we met in Vegas, just having that whole conversation about, hey, from my perspective, a lot of traders come from the poker background, and the two are linked because to a large degree it's all around probability. And so we were just going over the same, hey, probability this, probability that in a bar at like 3 a.m. Just like a couple of cool dudes.
Just a couple of cool dudes. Yeah, I mean, it had to have been probably even later than that. I enjoyed the conversation. I mean, that's when I think you really like sold me, and I was like, man, like I felt like a dumbass. I'm like, why did I not get into options sooner? And we'll jump more obviously into the conversation. Options is going to come up. You know what resonated with me from that night, or one of the things I do. Well, there's a couple things I remember. But one of them was that you said, I guess I probably mentioned on this in the podcast like early on about not seeing the world black and white, and a lot of people do see the world black and white, and it even kind of goes to probability, right? There's rarely any certainties. When did you first have you always seen life this way, or like when did this really like dawn on you?
Well, I mean, it probably has some deep-rooted background. At college, my specialty, I graduated with, I worked in speech processing and computer vision. That was my degree and master's, and there's a lot of math in there. It's an engineering degree, and all of that technology is really rooted in probabilistic thinking. If you think about trying to recognize speech, I mean, there's a lot of variables. There's accent, which I'm obviously full aware of, and it's trying to predict based on, it's a probabilistic model. When you say certain sounds, there's a finite dictionary of words, a grammar, and so it's this sound combination with this sound combination. It's continuously looking at the probability that this sound is going to come after this sound. And so it's a very probabilistic process. I mean, that's how that entire thing works. And self-driving cars, trying to recognize pedestrians, nothing's ever 100%. It's always going to be, I'm 95% sure that's a pedestrian, not a dog or not a tree, but, because it's based on the certain characteristics, but nothing's ever 100%. And it's everything's, which is in a lot of ways kind of scary, because you always think, even maybe the medical profession, you go to the doctor, you've got some symptoms. I used to think when I was much younger, it would be 100% that it's this. But then later you realize they're just going through the questions and building a picture, going through effectively a series of probabilities and going, it's likely to be this, so we're going to go down. So it's kind of everywhere in the world. And it's kind of fascinating because a lot of the theory behind probability was developed hundreds of years ago, and that's what I learned at college. And I'm a tech guy, but definitely at that level, it became way over my head, quite frankly. Yeah. But I was interested enough to go down the speech recognition route, and after graduation, I ended up in the speech industry working for a company in England. And kind of funny aside, I remember after I graduated, and I was definitely just focused on speech companies because that was my degree. And I remember distinctly getting a headhunter call from someone from Goldman Sachs. And I'd heard of Goldman Sachs. But I at that time, I'm an engineer. I want to change the world through engineering and all that kind of stuff. I had zero interest in anything to do with finance. And there was this guy just called me up out of the blue and said, hey, Goldman Sachs would be really interested in someone with your background coming on board. And I almost just cut him off and was like, look, I have zero interest. Just do not care about that. That does not, I just don't care. And I don't think I was rude on the phone because, I'm British and stuff like that. But it was, I just effectively ended the phone call and moved on with my life. And I won't say that's haunted me. It's just the kind of irony that I'm now ending up. Part of me wishes, if I'd have done that, what would life have been like? I mean, I don't know. It's just so interesting how these things happen.
Yeah.
But anyway, that aside, I worked for some speech companies, and it's always interesting. So this was back in the late 90s, and speech recognition was definitely, we had a joke, we'd call it like beach demolition, because it could never, speech recognition sounded like beach demolition, and things would, it was kind of a nerdy joke. It wasn't a good one at all. But the holy grail of speech recognition back in that time was, people would own video cassette recorders, VCRs, and the joke was that they were always flashing with the clock because no one could set the clock on these things. They would just flash 12. And so the kind of paradigm was, wouldn't it be great if you could just speak to your VCR and set the time? That would be like, that's what we're aiming for throughout this entire thing. And obviously that problem got solved with VCRs not ending up being a thing whatsoever. And in fact, the problem now is explaining to the younger people what a VCR actually was. It's just very interesting. I mean, that was 20 plus years ago, and obviously the world's moved on.
Mm-hmm.
And I did a bit of traveling around that time, different countries, which again was interesting with the speech recognition. Spent some time in Malaysia. It ended up in the US, working for Microsoft, as you said. And I worked there for 10 years, and it's been an interesting journey to get to where I am. But yeah, Malaysia was definitely kind of interesting. I will say that.
Yeah, we'll jump into that. I just want to ask you the speech recognition, because you were, this was something you were working in. What has it been like watching the progression of this industry, or if it is an industry?
Yeah, it's interesting. And actually Microsoft ended up being a big player in it. I wasn't working in speech recognition when I ended up working for Microsoft, but it's come a long way. I mean, I don't personally own an Alexa, but I mean, I won't say nearly everyone does. A lot of people have iPhones with Siri on it. It's pretty pervasive. So I think the vision has somewhat been realized to a large degree. But yeah, it's I would say it's interesting. The progression has been maybe a bit slower than was anticipated. I think it's a very hard problem to solve, because if you've got things listening in the background, they've got to figure out, are you speaking to me or are you just having a conversation with someone else?
Sure.
And so, for a lot of times my phone will start to do things when I'm just having a conversation with someone, but my phone's nearby, and it will start to trigger, and say something to me because I think you're looking for this. And it's like, I wasn't doing anything to do with you. So it's still, will it ever be perfect? I don't know.
Yeah.
But they've solved a lot of the hard problems.
The real question I want to know, Steve, is are they like are they like listening to us? Like, are the companies like gathering that data when we're not speaking to it? That's what I was always sketched out about. Yeah.
So, and this is an interesting thing, because if you work for a large company, so my wife still works at Microsoft. That's where we met, and they're actually not allowed to have one of these devices running in their homes by corporate policy, because, like, for instance, Amazon is a competitor to Microsoft in a lot of areas, certainly in the cloud, and they are, let's say you're on a conference call at Microsoft and you're talking about proprietary stuff, and you've got an Alexa device sitting in the background capturing all this stuff. Yeah, I mean, and okay, there are privacy policies, and they say, hey, we only, but they are using that data. That what they say is they take snippets of it, they'll send it out to be transcribed, and they it's a bit like shredding a piece of paper. In theory, you can't recreate what the original document was, so they say, but then it's all kind of based on trust, right? They say that they're not recording this stuff and it could be used in a nefarious thing, but how do you know that? And so it's easier to have a policy where you can't have these things listening in the background. So yeah, I mean, along with progress comes some interesting side effects.
Yeah. We were talking beforehand, about some of these philosophical debates or discussions we can get into, but that might be beyond the scope of the podcast. Let's get into some trading stuff. So you mentioned you had a chance to work for Goldman Sachs, so you really didn't have any interest in markets early on. What eventually led you down this path?
Oh, probably reality. Actually, it was I ended up working at Microsoft. When I got stock at Microsoft as a regular employee, and most of the time it just sat there and I didn't even know how much I had. And it was just I was younger and I had a good job. I was financially secure at the time, and I don't know, I didn't think about it. And then I was working there during the so I'd been through late 90s, early 2000s was the dot-com boom and bust. Not really any interest in trading back then. When 2008, 2009 financial crisis happened, I was a bit more aware of what was going on. From you get older and you start to think about contributing to a 401k and pensions and just money, right? You're buying a house, money starts to become more of a thing. And I felt, and also there's a bit of a difference in England versus the US. There's more pension schemes, you're more taken care of later in life, and investment isn't such a thing in England. Whereas here in the US, you kind of have to make your own security blanket to a large degree. So it's a bit more top of mind. And basically, I was, thinking I need to do something. I need to start making that nest egg or whatever. And I back at that time, I think I was bombarded by Motley Fool newsletter type things.
Yeah.
And at one point after the 200th one came into my inbox, I thought, you know what, I kind of know nothing. I'll give it a whirl and see what happens. And it just, as fate would have it, the service I signed up for, which was mainly a portfolio management thing, regular buying stocks which were undervalued, or it was fundamentals. They had a sister service which I got free membership to, or it was included. It wasn't free. It was included. Was an option service, and I thought, hey, I've heard about options. Don't know anything about them. This might be a good way to learn. And it was pretty basic, but I can think back on my whole options development as a series of light bulbs going off in my head. And the first one of the strategies was, okay, obviously when you're stock trading, you can buy and you can sell stocks. That's how it works. Ideally buying low and selling high. Well, in the options world, one of the early, fairly straightforward trades is you can do something. It's called selling a put. There's just puts and calls in the option world. That's all there are. But you can buy a put, you can sell a put, you can buy a call, and you can sell a call. That's it. Those are the building blocks. I won't say it's not more complicated than that, because it gets very complicated. But those are the 4 trades you can do. And selling a put, what it really means is, okay, let's say I want to acquire a stock. Let's say I'll just use Netflix as an example. And let's say it's trading at $400 a share. And I think a really good buy price, I would like to own Netflix at $380. So traditionally, what you would do is you may put in a good till cancel order to buy the stock at $380. And if it eventually dips down there, you end up buying 100 shares, right? Mm-hmm. In the stock trading world. Well, in the options world, what you can do is you can what's called selling a put with a strike price, which is just the price level, at 380. And the interesting thing is you get paid when you make that bet. You actually bring in money right away. They will pay you to do that. So that was like, hang on, that's weird. So I could either just put in an order if I'm trading the stock to buy it at 380, or I can effectively do the same thing and get paid for doing that, regardless. And that was like, why wouldn't I do this? Mm-hmm. Like, there's no down. If my choice is buy the stock at 380, or buy the stock at 380 and get paid for buying this, getting some money in addition to buying the stock at 380, it's like a no-brainer. Mm-hmm. And so that was like, wow, this is interesting. This is kind of weird. And then the opposite is not really the opposite, but when you come to sell a stock, the same thing is true through selling what's called a call option. So let's say I did buy the stock at 380, and then the stock rallies to 420, and maybe I have an ideal sell price at 425. well, instead of just putting in a good till cancel order to sell the stock at 425, I could sell a call with a strike price at 425. And guess what? I get paid up front. As soon as I make that trade, I get paid up front to make that trade. And if it gets to 425, I let go of my stock. So not only did I get the profit on that stock, I also got paid on both ends. And the interesting thing is if it doesn't reach either of those levels, I still keep the money that I got paid in the first place. So I get paid if it doesn't really work out, and I get paid more if it does work out. Now, this is a very simple trade, and I'm oversimplifying some things. There are some implications, but in essence, that was what really, once I figured that out, it was like, why would I ever trade stock again? In isolation. Why wouldn't I use options to acquire? Even if I just want to end up being a stock trader, I would use options to enter and exit positions because there's no reason not to, because I get paid for doing that. And so that was like the first major light bulb that went off. And then of course you can extrapolate it. So what happens is you sell, on the buying of the Netflix side, you sell this. It's trading at $400 a share, and you're really interested in buying at 380, but it never gets there. You just keep that, what's called premium. You keep the money, and then you get to do it again, and then you get to do it again if it never gets down there. So you just keep bringing in this money, even though your order never gets triggered. And so what you end up then doing is, hang on, this ends up being a fair amount of money, because it could be $1,000, by the way. If I want to do that for next week's option, maybe I could bring in $1,000. I could get paid $1,000 right now to buy Netflix at a lower price than it's trading right now. And if it never gets down there, I just keep the $1,000. So what you end up doing is going, wow, that's $1,000. What about if I do 2 lots of this? I'll get $2,000. But I don't really want to buy Netflix anymore. I just want that money. And so you end up, and this is where it can get dangerous. You end up doing the trade just to get that premium and not remembering that if it goes below 380, I'm going to have to, because the way the options work when you do it like that, you have an obligation to buy the stock at 380. If the stock tanks to 350, you still have to buy the stock at 380.
Oh, okay. Got it.
So you are starting off from a stock perspective at a loss. But and people think, well, that's stupid. What, you would never want to buy it at 380 if it's trading for 350. But you have to compare it to the situation where you were happy to buy it at 380.
Exactly.
That's the and that's where people get a little bit lost on that. So if your choice was, I'm going to just purely buy the stock at 380, I could sell a put and buy it at 380, get paid $1,000 or whatever it is up front. I'm always going to go for that because the alternative just doesn't make sense.
Now, Steve, would you say that most option traders, they're buying calls and buying puts? Why do you think that is? Is it just a little more straightforward?
Yeah, well, I think there's a number of factors here. One is it's more straightforward. It's a bit easier to rationalize. I think a big reason is, from what I just outlined with selling the put to acquire the stock, a lot of people don't have the money to acquire the stock. I mean, and by the way, when I acquire the stock, it's a minimum. One option controls 100 shares. So if I had to buy Netflix at 380, I would be buying 100 shares at 380. That's not insignificant capital. And so people, certainly with smaller accounts, I could take if I'm going to buy an option, there are plenty of options I can buy that are a lot cheaper, very efficient on capital, by the way, compared to buying the stock. And so my ROI is going to be a lot more than if I win, then my ROI is going to be greater if I do it through buying calls than buying the stock. So a lot of people are attracted to that. The problem potentially with that approach is that options, by their very construction and their characteristic, they're a depreciating asset. So they depreciate over time. And so, which is one of the reasons I'm so glad I learned first that I want to be on the other side of the trade, because I'm effectively trading with the wind at my back. I'm, an option price is at a certain level. I'm selling it, and over time it's going to decrease. Now it could move against me, and so obviously that could increase if it goes against me. But over time, all things being equal, if the stock just stays at the same level, that option is going to get worth less and less and less as each day goes by. And so if I'm short the option, I'm going to make money. A bit like shorting a stock and it just gradually decreasing in value. That's really the theory. And so, a lot of people, you can buy cheap options. You can therefore lever up. You could put a lot of money into a lot of cheap options. And if you make it, if it goes in your direction, you'll make out big time. The problem is it comes back to probability, where the probability in general is against it. If you do it over and over and over kind of blindly, then you're pretty much going to lose money. I mean, that's just the way, you've got a probability of less than 50%. So if you back to the kind of insurance model, the casino model, that's how casinos operate, right? I go to a casino and I bet on a slot machine. I've got a less than 50-50 chance of winning. So if I do it enough, I'm going to lose money. I mean, that's just how it works. But, in the media, let's talk about GameStop, let's talk about AMC and all the crazy call buying that's happened over the last couple of years. There are some people who are in the right place at the right time who bought a ton of call options before it went from $5 to $500 that make out like bandits. But that's always going to happen, and then it comes down to, well, were they lucky, or did they know that was going to happen? Were they in the right place at the right time? I suspect there are even more people who lost a lot of money trying to do the same thing. I mean, we all know that, but those aren't the stories that are reported.
Yeah.
So because again, back to probability, everything's a bell curve.
Yep.
You hear about the people at one end who either blew up spectacularly or made millions and millions from doing this, and everyone wants to make the millions and millions just easy buying cheap call options. But most of the time, it's not going to work out. Never works. I mean, I won't say it never works out for me, but it rarely works out for me to do that kind of strategy. It's akin to just buying lottery tickets to a large degree. It's pretty cheap. There's not much risk. But am I going to win a jackpot? I might. And that's, that can be attractive to people. But if you work out the probabilities, you've probably got more chance of being hit on the head by a meteor falling out of the sky, which won't be as enjoyable as winning the lottery. But, that's the kind of thing. And I think a lot of people don't grasp odds very well.
People don't. You said they don't grasp odds very well.
Yeah.
No,
well, I said
not at
grasp because I said grasp because I'm British, but yeah, grasp is.
Honestly, to jump in, I don't think a lot of people even think like that.
Yeah,
Much less grasping.
Probably not.
Yeah, I mean they don't, and it is a certain way of thinking that. I mean, again, my background was in probability, and I'm an engineer. I'm logical. It's funny when I went full-time trading, and I wasn't really equipped, I will say. I knew about options. I was making money with options, but I wasn't, say, replacing my salary. I had a pretty good job at Microsoft. It would take me some time to get anywhere near replacing that. But I remember it was kind of what got me here isn't going to get me there. I had to. I'm going to have. Am I going to day trade as well? I kind of had to reboot. And so one of the first free webinars I attended was on Fibonacci. And I'm a mathematician. Effectively, I heard of Fibonacci, and I thought, oh, this will be interesting. But you've got to bear in mind, I'm an engineer. I have this logical thought process, and the webinar started, and they were talking about these certain numbers, and you could buy here and sell here, and it all works. And I'm typing away on Zoom or whatever to the moderator saying, so why does this work? Like what, I know Fibonacci numbers, but why does it work? And they're like, well, these numbers are in nature and they occur. And I'm like, yeah, but there's a lot of things in nature. But why does this work? Like, what, these numbers sound kind of magic to me. Like,
What are the
why does this
mechanics?
work? And they say, well, it just does work, and I could tell they were kind of struggling to answer the question. And eventually I kept pressing and they literally stopped talking to me because they didn't have a good answer. And what I needed to hear at that point in time was, excuse me, I needed to hear, look, if a lot of people follow the same technique, they follow the same strategy, then it's gonna kind of become a self-fulfilling prophecy.
That's where
And
the
they will
bid's going to
work.
be. Yeah, because that's where everyone's bid.
Because that's if everyone's looking at the same, but they didn't tell me that, which
Yeah, because
is
they don't know the
unfortunate.
mechanic, because they don't know the mechanics behind trading.
Right. And so, but that's what, as an engineer, as a newbie
Exactly.
trader, I needed to hear, if they'd have just said,
Yeah.
look, it's a self-fulfilling prophecy. It's not really about the numbers. You could say the number was 10. It doesn't have to be the golden ratio or anything.
Yeah.
If enough people are looking at 10, and then they start selling because 10's coming up, they start selling, then obviously the thing's going to back away from 10. And that's what I wish someone had told me, whereas it just felt like kind of magical thinking at the time. Now I know better now, but I didn't know better then. And so actually that, I'd come from kind of this rudimentary options world, which is in my mind very logical, and I can talk about that in a bit more in a second, to something which was kind of magical numbers which don't have any basis in logic to me. And so that kind of turned me off the day trading or the techniques which are used to a large degree. And I'm not saying they're wrong or anything like that. It was just, for me at that time, I wasn't receptive to that. And I'd also heard that engineers, doctors, scientists don't do very well trading because they try and rationalize everything.
Mm-hmm.
And that was a kind of disappointing. That was a bit of a, am I going to make it in this business? Because I do need logic. I do need some foundation rather than some magical, or what I perceive to be magical theory. And actually, one of your fairly recent guests, Sergey Pafiliev, he mentioned something which really resonated with me, which was, and I'm paraphrasing here, but it was like the market's obviously very emotionally driven to a large degree. You've got this big collection of people doing different things. It's not necessarily going to make sense, but options are actually really logical, the way that options behave. Now, the options behavior is based on what the market does, but the way that the options then behave is very logical. So it's a natural fit for me, and I totally 100% agree with that. Options behavior is very logical. What they're based on may act completely erratically, and I can't predict the market, but the way that options will then react is logical, if that makes sense.
Yeah, it does. It does. I mean, and this, like trading or, really any sort of, gambling can really mess with your head. Like you need to like ground yourself somewhere. You need to have like a base of like rationality or like a system, etc. So Steve, how I know you said I know you're more apt for selling calls, selling puts. You're a bit of maybe more of a contrarian like myself. Maybe just kind of just go over, maybe, I know it might be hard, but your general methodology of trading.
Yeah, and it changes. It does morph, and part of the morphing is you learn new techniques. I've traded very differently from when I started. The starting was the selling puts, selling calls, those light bulbs going off, because it just made, like, why wouldn't I do this? It's free money almost. And then it morphed. Actually, there was someone I I came across quite early on, She was called Karen the Super Trader, and she made some headlines by doing something similar. She was pretty big size trading, and she made a ton of money, like millions, from doing that kind of thing.
Oh, was that on Tasty Trade?
It was, and I don't know if you heard.
Exactly. Yeah.
So
Well, let's go ahead. I'll let you finish.
Yeah, it's a tricky one. I will say that she had a very sound the strategy makes perfect sense. I would say she was taking a lot of risk. And there is something in options when they go wrong, when it moves against you, the way you defend. And then this is something I also like about options, by the way. You can defend your trades. Like it starts to move against you, you can adjust the position.
Oh, cool.
And so it's not, I mean, you can choose to say, oh, it's moved against me, I'm out for a loss. But in theory, I won't say necessarily all the time in practice, in theory, I hesitate to say this, but theoretically, you never really have to take a loss. You can keep you can take the loss short term. So you sell an option, it moves against you. You buy it back for a loss. It's like you sold low and you bought high, which is obviously not what you want to do. But then you can immediately turn around, go out further in time, and sell it again, and you'll bring in more money.
Oh.
And then if it moves against you more, you can go out further in time and bring in more money. And so you can effectively do, if you've got a large enough account, you can do this forever until the thing isn't moving against you and rebounds, and then it all expires so effectively you ended up having sold up here and it expired for nothing, and therefore you made the difference.
Easy game.
Yeah. It sounds when you're in it, it's not as pleasant, but you can technically do that. Anyway, she was trading a lot of money, and so when the market moved against her, her losses, and I'll call them interim losses, because what she would do the same thing, and she would buy back these now expensive things for a big loss, go out 1-2 months or whatever, sell, bring in more income to easily cover that loss, and then hope that the market then does the opposite to whatever it did to cause her the loss, which it ultimately would. And that's how she made a lot of money. So the strategy was sound. The problem was, I think, and this is just me with my conjecture, is because she was successful, she took a lot of outside money. She had a couple of funds going. And when you start to do that, you have to start to obviously comply with the SEC. And now you have, so when you take that initial loss, when it moves against you, how do you probably need to report that. As an individual trader, you don't have to do that necessarily, but you're now under a different set of accounting rules.
Exactly.
And so, and I'm sure a lot of people, because she was doing so well, just gave her money, and it was like, I don't understand your strategy, but I could make a lot of money by giving it to you. So they probably I'm sure they weren't into the exact mechanics of the strategy. And so you will go through periods of fairly heavy drawdown, but it will, as long as you're not betting too big, you can recover that over time.
So it's really about making sure you have enough bullets, essentially.
You have to really, when you trade the way that I do and the way that she did, you do have to you have to understand risk.
Yeah.
You really do. It's always job number one.
Yeah.
Always. And I think she did. I mean, she had a good strategy. It's just now she's reporting probably these massive losses, or should have been reporting these massive losses. But it's kind of, now we're in this gray area of, well, if I take this loss, but now I sell these further dated options to bring back that loss, like I pay this money out, but now I'm bringing this money back in. Technically, I think you're probably supposed to report it as a loss. She may have done some, I don't know the details. It sounds like she did some
massaging,
tricky accounting to
massaging.
Financial engineering to cover this up, and I think some of the investors who didn't understand her strategy suddenly see, wow, we're losing all that. I want to, and then is not the time to withdraw the money, because if they just are patient, they're going to get it back and then some. And so I think the whole thing became unraveled, and she got a bad rap. And all the naysayers and there's a lot of people who disagree with this style of trading. They all came out of the woodwork and were like, "See, we told you it was a terrible way to trade, etc., etc." And so
what would the people who argue against, who say this is a bad style, like what are the
it's the risk.
What are the counter arguments? Yeah,
it's because it's back to that whole, when you sell options, if you sell calls, you can have unlimited risk. And people don't like to have unlimited risk. It's probably not technically unlimited. It's only unlimited if the stock that let's say you're shorting a stock. You also have unlimited risk. The stock could go to infinity, and you have unlimited risk. That's the equivalent.
Yeah.
It's not, but we know that's not going to happen. It could double. It could really hurt you, but it's not unlimited in the truest sense of the word. But you do have to watch that. You have to have strategies in place. If I'm starting to get hurt, what do I do?
Exactly.
And that can happen on both sides. And I would say most of the criticism comes down to people don't put risk first, and it can be dangerous. I mean, I remember I was trading that strategy back in 2014, 2013. I didn't understand my risk. I mean, I'll be honest, because it's easy money. I'm making money every day. Doesn't really matter what the market does within reason. It's grinding up. You're just bringing in money day after day after day. And that's dangerous, because you start to get very complacent. And that's when you start to, well, if I can make $2,000 a day, I could just double it and make $4,000 a day. Then you do it, and that's what happens. And you're like, okay, I could make 5,000,
Yeah.
And that's the danger. And that's what a lot of people get caught up in. I lost, I remember one day the market had a slight dip, and I was down 40 grand. And I was like, what is going on? That blew my mind.
Mm-hmm.
And that was a wake-up call. I was like, I do not want to, the next day I was up 24. And it was like, I don't like this volatility of returns. I'm not comfortable with that. So then I had to change my strategy into, okay, I like the notion of it, but that's just I'm either trading too big, it's not the right strategy to me, it's too volatile for me. And so then I changed it to and you can do the same trade much safer, of course. The risk's less, so the reward's less, but you can do things that are similar. Did that for a while. And, nowadays, I trade a reasonably sized account. The other thing is, we all know the industry is kind of stacked against you. If you trade a certain kind of account, you actually get something called risk-based margin. That's actually very similar to the way that margin works on futures. The span margin, which I'm sure you are very familiar with, JJ. Yep. But you don't actually have to put up much money to trade. They do it. It's actually a much more realistic way of analyzing risk from a brokerage standpoint. They assume that instead of going to zero, which is how normally, you buy a stock, you have to put up enough money generally to account for the stock going to zero. Yeah, that's what you pay. You pay $10,000, you get $10,000 of stock. If it goes to zero, bad luck kind of thing. With options, you can actually lose way more than that 10,000. But what the brokerages do is they stress test your positions down by like a certain percent, and that's the amount of money you have to put up. And you can completely manipulate that by doing certain options trades. So eventually, as I got more and more advanced, that's how I started to trade. Because I learned to manipulate my curve, so I can actually hold a fairly large position for not much money.
Nice.
And I can be, the way I tend to trade, my kind of default, if you want, I'm not going to explain the exact trade, but my default position is I'm generally short the market slightly, because you can the other weird thing, which non-options people, it's tough to grasp, is you can swing how directionally short or long you are. It's a bit like buying 1 share, 2 share, 3 shares, 4 shares of
Okay, yeah,
stock.
yeah, your cost basis.
Yeah, and it's and I can, most of the time I'm kind of neutral. In other words, I won't make money on the stock moving up or down. I make money from the options decaying. I don't want any directional risk because I don't know what the market's going to do. So I stay neutral, and just as time passes, I make money because the options decay, and that's fundamentally how I make money. And it's a bit complicated, but I like to be slightly short the market, and then have a lot of tail risk protection in case of a crash.
Yeah. No, it's incredible. It's incredible. What you've been essentially what, short the market for what, since like 2014?
Well,
And
yeah,
you've made money.
yeah, I mean that it's it's definitely oversimplifying it, but fundamentally, I'm nearly always short the market, and when the market actually moves up, like yesterday we had a Fed minutes release, and I was slightly short the market, and then the market took off after that, and my positions gained in profit even though they were short. And it's to do with something called implied volatility in options. I don't necessarily want to get into it, but in addition to holding a short directional position, I'm short volatility. So when the fear goes away, I make money from that aspect of it. I lose a bit of money on my direction, but I make more money on the fear dropping.
Oh, beautiful.
And it's and the way I would actually explain it is, and any options trader, whether they're doing what I'm doing or they're doing the opposite, they're actually really trading what's called implied volatility to a large degree. So my net position, the way I look at it, it's not really I'm net short the market and that's my stance, and it's not that I'm expecting a catastrophe and that's why I'm short. It's I'm net short fear, which is implied volatility. But when fear spikes, like there's going to be a war or there's going to be interest rate rises or whatever, that hurts me. Normally the market goes down. The way I hedge my short fear is by being short the market.
Got it.
If that makes sense.
No, it does. That's great. That's almost, like when large traders, they'll have one position and trade around it, sort of thing.
Yeah,
And
it's
this
exactly
is the same thing. Yeah.
With options. You totally trade around everything. I mean, you could buy stock and then totally trade around that stock position.
Yeah.
If you've got a stock that you're losing money on, you can actually use some option strategies, which will it's called a stock repair. It will get you back to break even if the stock doesn't cooperate.
Nice.
I mean, it's just it's like a chess game versus like checkers to a large degree.
Steve, I just thought probably would have been a better title for the Vegas presentation. Don't lose a trade ever with Steve Hedge.
Yeah, yeah.
That'll get the audience coming. People are like, what?
that would get the SEC's attention as well, I'm sure.
Oh, don't lose a trade ever. So Steve, I know. No, but in all seriousness, I have trained with this guy, Steve. It's some serious business. I'm still getting my head wrapped around, all of it. Pay attention to this, man. Take a look at the course. It's real good. So Steve, speaking of courses, I've known you've taken, a bunch throughout your time learning options. How do you think how you present options is a little bit different than what you've encountered on the marketplace?
Yeah, I mean, it's there's a lot of stuff out there for sure, and there's a lot of bad stuff out there. That's it's as you would expect. It runs the gamut. I mean, I really designed the course on all the stuff I wish I'd known when I started trading, because I learned very piecemeal, which is how probably most people organically learn. I did pay a lot for a lot of courses, and some were good and some were, I won't say I ever took anything that was absolutely terrible, but certainly it wasn't billed as, I paid a bunch of money and what I got was either stuff I'd heard before or it was completely positioned as a different thing. And what I really focus on in this course is how options behave. It's whether you. I'm not really. The aim of the course is not to have people trade the way that I trade, because everyone's psychology is different. What I find comfortable, and by the way, I mean like today, I've got some trades on the market. I'm very neutral. The S&P 500, it was down, whatever it was down today. My drawdown was minuscule today. I'm fine with it because I make money most days. I don't really have to monitor my trades for the way I trade. Sometimes, and sometimes I totally do. Sometimes I'll have to stay up all night babysitting them. But I found a method that works for my psychology. And that's going to be different for everyone. So I'm not a fan of teaching people, hey, this is how I trade. This is how you should trade. Who am I to say that? Because everyone's different. So whether you trade how I trade, want to trade how I trade the exact opposite way, it doesn't really matter. What's really important is you've got to understand how options behave. Because they could, back to the risk management, you can really get hurt if you do not understand. It could also be death by 1,000 cuts, where you just lose money, small amounts of money, lose. My psychology is I'd rather have more winners. I'd rather have a 90% win rate and deal with the losing situations in that same way, where I'm rolling options out to recover my losses or whatever. But most of the days I'm winning because that makes me happy. I want to be happy. I want to feel like a winner. I don't want to feel like a loser who every now and then wins big. That doesn't fit my psychology. But there's plenty of people that do. But again, regardless, it doesn't matter. You got to understand what you're dealing with and how that's going to play out.
Yeah. No, I like to think of those people are kind of like sickos, man. Like, because it reminds me of poker. Like when we were going through the course, I played cash games, and like that's a more consistent, like it's like you get a bigger sample size of hands in, your skill edge is going to show up over the long run. Where the people who like play tournaments is like you're so subject to variance, you're going to lose a lot. But when you win big,
right?
And that's just not. I'm similar to you. I need like just I prefer more steady. Okay, like it builds up.
Good.
Yeah.
Yeah, I mean, it's not. You're going to go from zero to. I mean, again, back to the whole bell curve thing. Yeah, some people are going to go from zero to hero in one trade. But I always think it's the worst thing when a new options trader puts on their first trade and just wins, because they get a false sense of, well, that was I put this thing on, and it was a breeze, and I made this amount of money, and then that's where it starts to get a bit dangerous. And unfortunately, when you're selling options, you win way more than you lose in terms of number of occurrences. Doesn't mean the dollar amounts because when you get hurt, you can wipe out all your gains from one loss, because that's the way the probability works. Yeah. But then it's about money management, risk control, and all that kind of stuff. But yeah, I mean, I've spent tens of thousands of dollars on stuff. I mean, and I still, there'll be it will be, I might pay $5,000 for one course to learn one trade. And that training is like 2 hours long. But I know, I know enough nowadays whether, I could make probably 20K off of that just doing one of those trades. So it's the ROI is there for me to pay that money. But when you're starting, you have no clue about that. But yeah, I probably pay. I mean, I don't know what I've spent over the years, but 50,000, I don't know. It's an expensive business but it's important to learn it the right way is what I would say. Because it's probably going to save you a lot of money in the long run. I often think about it. I think stock trading is pretty simple to get started at, because stocks either move up, they move down, or they kind of chop around. It's very linear. Options is more like a 3D. You've got a lot of different, like the implied volatility that I mentioned is one variable. You've got time. It's a depreciating asset, and it's also based on the underlying stock movement. You've got a lot of. It's a bit like whack-a-mole to some degree. And maybe it's like medical school. You don't just do a few weeks of training and then dive into brain surgery. Well, I hope
that's what I always say. That's what I always say.
Yeah, I mean, I hope that people don't. And I would say learning options has a steeper learning curve at the beginning, because it's a whole new language with strike prices and option decay, and all of this. It has its own language, which can be intimidating. So I spend a lot of time on that. A lot of these concepts that we've talked about with option decay and all this craziness of I love the fact with options, I'm wrong most of the time. I'm directionally wrong if I'm short the market, I'm obviously directionally wrong for the last X years, but I still make money, and that confounds people. Like, how does that work? So you spend a lot of time on those concepts because they're obviously really important. I might be wrong 80% of the time on my trades. Doesn't matter as long as I'm making money. I don't care about being wrong if I'm making money. I don't like it when I'm right and lose money. That's worse for me. But you have to spend the time to understand the concept, because then once you fully understand the concepts, I feel, which is why I like trading options now, your trading life, I don't have to stay glued. I can put on trades that will make money if the market goes up. They'll make money if the market, just one trade can have multiple behaviors. It's not just I'm short stock and I win in one direction, I lose in the other. I can win in whatever happens in some trades. Or I could lose whatever. You can define your own trade profile, if you will.
Yeah.
And that takes time to develop. But once you've developed it, you don't have to stare at screens all day if you don't want to. And you still can. You still can day trade options if you want. If you want that adrenaline rush, you can. But I will hold. I'm nearly always in something. I can't remember the last time I had no positions on, like 24 hours a day, and yet I sleep. I sleep perfectly at night because I know if the market crashes. In fact, if the market crashes, that's not what I intend to happen. That's not what I want to happen. But I'll make out like a bandit because I've got so much tail risk protection. My biggest ever success, I was long the market, and you may remember, I think it was affectionately termed Volmageddon. It's in my mind. I think it was February 5th, 2018. And there was a massive shock to the market. And I was positioned long, but I had a lot of tail risk protection. So I was completely wrong, but I made the most amount of money I've ever made in one day just because my tail risk protection kicked in, all my hedging. And I was happy with that. But I was 100% wrong.
All right, Steve. So I wanted to talk a little bit, not to get too in depth. No, I guess just to speak to the point, I really liked how because a lot of people just like, hey, trade this way, trade that way. I think like leaving it up to the person, but like you said, like teaching the mechanics of it was nice. But I do remember thinking, and I probably said it to him, JJ. I was like, yo, just tell me how to fucking short. Like options. Just I want to short these shits. Just tell me how to do it. But no. It's
and I'm happy to do. If you want to do that, I'm happy to tell you how to do it. What's more important to me is you understand the pros and the cons of doing that through options.
Absolutely.
If you're wrong, it's going to be different. Your behavior will be different if you're wrong than maybe just shorting stock and getting out from a lot. You've got a lot of options that you could do. Again, you could kind of roll that out into the future, whatever. But yeah, I'm happy if people want to trade a certain way. I'm more than happy to explain how I would go about trading that certain way. I just don't want people to come in fresh and I say you need to trade in a certain way.
No, you do it the right way. Yeah, no. I think it's for sure the right way. It's funny. I was thinking another thing too. So don't ever lose a trade with Steve Hedge, and don't ever you don't have to leave the bed and trade. And this guy's notorious for trading from his bed. He does. This guy's teaching options. Can you believe it? This is insane.
Exactly. This takes Pajama Trader one. We're next level. You don't even have to tell. You could be naked in bed trading. There you go. How's that?
Well, often I am, but I'm not wearing any pants right now, right? But no, it's true. There's something called the Greeks in options. Think of it like you're flying a plane, and you could, maybe you're flying an old plane. The instrument panel's pretty rudimentary. You can maybe see your altitude, but that's kind of it. Most of the time, you're looking out the window, you're gonna, you're navigating by sight. That's, you see the runway, you're going to land the plane. You're not really relying on instruments like in the olden days, like when I started in speech recognition, those kinds of olden days. But then technology came along, and it could be 100% foggy. The pilot can't see anything, and the plane kind of flies itself, takes off itself to a large degree, lands itself, and they're 100% reliant on a few numbers on their instrument panel. And the Greeks in options trading it's not the perfect analogy, but it's kind of like that. In other words, I have 4 screens for when I'm trading, but I can be in bed on my phone just looking at my account, and I use effectively probably 2 or 3 just literally numbers, and I know exactly how all my positions, like if the market is doing X, I know how my trade is going to behave. I know what my P&L is probably likely to be, plus or minus something. So if the market's going to be down 1%, I pretty much know what my P&L is going to be, or if it's up 1%, or if it's doing nothing. And so I can just look at my phone, and if it's doing a certain thing, I do need to adjust the trade. I can do that on my phone, and it will change these Greeks numbers. And now, instead of looking at all my charts or any of that stuff, I don't have to do that. I just look at these numbers, and that's how I can monitor my trade. I'm not saying I would initiate a new trade on my phone. I would adjust trades on my phone very easily. But yeah, I mean, I don't want to say I just stay in bed all day and that's how I'm on my phone and trading. That's not the norm mostly. But but I love that my wife's not as happy about that style of trading for me. But because she has to get up and do a proper job. But the fact that I can, I mean, and in seriousness, it means I can go to Vegas and I'll have positions on while we're in Vegas, while we're presenting. I'll have trades on, and the market could be crashing, and I'm okay with it because I know what my profile is on my options, and that it will be fine.
Yeah.
So I just find it comforting, may not be the right word, but I find it very. I found for me a very relaxing way to trade, even when things get crazy. Assuming my size is in check and my risk management is in check.
That's really, really good to hear, because like the way I was trained, like I started in the business in '92, and you don't leave your terminal when you have an active trade on. There is no way in hell you leave. So I still have that in me. Like I don't hold positions overnight.
Right.
Like I have trouble holding on stock when it's given to me for free.
Yeah.
Let alone, I mean, Jesus, if I had to pay for it, no way. But no, it's so to hear that, if you can actually get a good night's sleep with a position on,
and I could have large positions on that.
That's significant.
Yeah, and because for options, because a lot of my strategy is time decay, I need to be in the trade for that time to bleed out.
See, this is beyond Ray, but when you get up to our age, the old ticker, it's not exactly like we're marathon runners, you and me.
I see all the day trading that happens in the room. I mean, I'm not sure I could do it. I just don't know. Yeah, I know you often talk about, wow, there's no way you could hold. You can't take necessarily the stress of holding positions overnight. And I'm at there. I don't think I could day trade.
Yeah, it's interesting.
And the other thing that's a bit related to that is, and again, it's just the way way options work. You can have 2 different people, person A, person B. Person A can have a bullish position in options on a stock. Mm-hmm. Person B can have a bearish position on the same stock. Different positions. It's not like B's is the exact opposite trade of A's, but one's a bullish position, one's a different bearish position. They could both make money.
That's amazing.
Just from the way that options work. And again, that back to the course, that's the beauty of options that I like to teach, because it's amazing to me that happens.
That is.
So you don't even have to. You don't really even need to look at a chart, do you?
I do look at charts, and the reason I look at charts is more to see what the recent range was. In other words, if I'm going to put on a trade, now I don't have. Technically, I could trade fully without charts. I choose not to, just because I do want to see what the recent range was. But I don't need a lot of indicators. I don't need a lot of fanciness. It's more about what's really important for me. The metric is something called implied volatility. How much fear is out there, because fear is opportunity. Because I'm in the best analogy is generally the insurance industry. I want to act as the insurance industry, and what happens is when the market crashes, it's effectively like people's houses are burning down. That's the time you want to be selling them homeowners insurance, because you can charge a lot for it if the house is already burned down or half burnt down. Right?
Exactly. Yeah.
You charge them a lot of premium, and by the way, the term is the same. It's premium.
Yeah.
And so I'm going to be the insurance company bringing in premiums from, and this is where you back to probability. You have to have a high, or ideally you want a high number of occurrences.
Yep.
So you bring in premium, and it can be small amounts, which is also why people don't like to do it, because they think the amounts are too small. But what they don't put together is you've got a very high probability of keeping that premium. So a lot of premium is coming in, and you can adjust. I mean, you could take more risk and bring in more premium. You can define, I mean, that's the other thing I love. You get to pick that. How close to the fire do you want to be? Because you can be, if you want the adrenaline rush, you could bring in a lot of money, but be kind of more, I'll say risky, but more likely for it to go against you. Or you can be far away. I love trading Amazon, because I can be 200-300 points away from Amazon and pull in quite a lot of money, and it's never going to get down there or up there or whatever. And so that's where you can I'm just bringing in premium like an insurance company. You want to be a bit more diversified on, a number of different stocks or indices. I mean, I just love trading SPX, which is it's effectively ES or SPY. It's from a notional standpoint, it's 2x an ES contract. Because it doesn't have earnings. It doesn't. I mean, a big move in ES, as you know, is 2%, 3% in when it limit down 5% overnight or whatever. But most of the time, it's probably less than 1%. It moves, and so if I'm playing both extremes and I'm bringing in money from both extremes, most of the time, I'm going to just keep that money and keep that money and keep that money, like the insurance company.
Yeah.
And when it moves outside of that range, that's like, oh, a house, someone took out a premium and the house burned down. I have to now pay out.
Yeah.
And so it's all boiled down to a math problem. How do I bring in enough premium so that if I have to pay out a claim, I can afford to pay out a claim?
Got it.
But it's a bit different in the options industry, because back to what I talked about with the Karen, the super trader thing. You can roll out, okay, I pay out that claim. I have to pay out that claim, but now I can effectively almost roll out that claim and bring in more money and do some things to bring that money back to me. You've got a lot of versatility, and again, that adds to the complexity. But it's a beautiful thing once the light bulbs, and that's why I also like teaching it, because I remember those light bulbs that went off for me.
Yeah.
And I'm sure you get the same thing, JJ.
Exactly. It reinforces.
Yeah, and it's wonderful when people suddenly, aha.
Exactly, right. And it makes you a better trader when
Yeah.
when you're talking about it with other people. I find that it helps reinforce. That's why I always say I'm an internal student of the market,
Oh,
because
yeah.
because it's amazing how someone who doesn't really know anything sometimes they'll come in and they'll see something and they'll say it in a way that makes something click in your head too. It's
Right.
really weird how that happens.
Yeah.
Right. So being open-minded to that is really, really helpful.
Yeah, I mean,
yeah.
I'm not a genius. I'm just an average.
Me neither.
I'm
Yeah,
just
me
an
neither.
average guy.
Yeah.
I make mistakes. I mean,
Yeah,
I've
the
had
guy,
some.
the guy who went to Cambridge. Yeah,
Well,
okay, all right.
sure, but it it yeah, I all that really, yeah, I know math and stuff like that, but you can make options as I mean, there is some
Oh,
crazy
yeah.
mathematical theories which even I
yeah.
don't understand. I mean, I don't care to, and you don't have to. And that's the other thing. You just have to understand some of the higher level concepts. You don't have to derive the Black-Scholes
I was just
theorem.
gonna say you don't have to be able to derive Black-Scholes.
No.
Yeah,
I
that
mean,
was
you
good.
need to understand, it's helpful to know, okay, there is this theory. It's rooted in mathematical probability stuff.
Yeah.
But all the brokerage software does it for you. That pops out. I mean, you can literally look in an options chain in the software. It tells you the probability that a stock will reach a certain level in a certain time frame.
Oh, cool.
I mean, you don't have to calculate probability.
Yeah.
You can just go, okay, I've got a 70% chance of making that money. And this is where it comes back to humans don't get that. 70% often translates to I can't lose.
Mm-hmm.
No. You've got a 30% chance of losing. That's actually quite high.
Yeah.
That's very high.
Yeah.
That's
Yeah. One in three trades.
that's very
you're gonna
high.
lose.
No, that's very high. I mean, like I didn't like I had to learn. I think it's one thing understanding probabilities like intellectually, and then it's another thing like really understanding it like viscerally. And like I had to learn the hard way, like through poker. Like you take so many chances where you're like 98% favorite and losing. You learn
Exactly.
that it's like not zero, like 2% chance is not zero.
Exactly.
It's 2%, and like these things happen more frequently than I think we can comprehend. I mean, and there's so many studies and books like around this, but it's still fascinating to me this day, like how we just can't really grasp it that well. I don't know.
Yeah, I mean, and if you've got a 1% chance of being wiped out financially, that, how do you think about that is an interesting, different people are going to think about that very differently. But the main problem is people can't rationalize if they do that same trade 100 times, they're probably going to get wiped out.
True.
Yeah. Well, I forget the theorem, Steve, but it goes that like if you like you're eventually bound to go bust if you don't have an unlimited bankroll.
Yeah.
And it's more of like a gambling like theory, and I don't know the specifics to it, but I remember reading over it, and it's that's why we have risk parameters. That's why even like casinos have like max bet limits, and it's to
Exactly.
protect themselves, not you.
Yeah, I always thought, oh, it's a $50 limit table. That's also, I don't want to. They're so kind. They don't want you to blow up. They don't want you to risk too much. And then, of course, you eventually learn, oh, no, it's their risk management. They don't want people with deep pockets to just bet the farm and wipe them out.
Yeah. No, yeah, it's interesting that the whole probabilities.
Yeah.
Obviously, we talked 4 or 5 hours or whatever it was.
Yeah.
You told me get it into some like miscellaneous stuff, and then we'll wrap this up. I remember that night we were talking, and you spoke to me about a time you might have made an expensive misclick trading.
Yeah. Again, back to I'm just a guy who trades. So this was a few years ago, and I dabbled in futures, and there was a guy I was following. He had this specific trade, and it was an overnight trade. I mean, it was everything you would hate, JJ, but it was on gold, and
wow.
you would, if the conditions were right, you would put this trade on, and obviously you can go as big or small as you want. But for me, it was one contract, and you have a stop and your profit target, so it's bracket order effectively, and what will happen overnight, but it's risk limited. And at that time, the brokerage software I was using, I'd noticed there was some, let's say, discrepancies sometimes. It was set up that when I would do a stock trade, it would I had all my defaults set up that it would default to 100 shares. When I did options, it would default to 1, and when I was going to do a futures trade, it would default to 1 lot. That was what I did. But options are in when you're dealing with option and stock, it's set to 100. I always want 100 blocks of stock shares, because then I'm going to do some options plays on it. I want it to be a round lot. And what I found was, a few weeks before this particular event, that every now and then when I would do a futures thing, it would default to 100 lot of futures when I wanted it to default to 1. But I would catch it, whatever. Anyway, there was this one fateful evening, and it was literally at midnight my time. And I put on this gold trade, and it would default normally to 1 lot, and I wasn't looking, I will admit. And so I put this trade on, and then I was messing about doing something else, went to the bathroom, came back, and I saw the gold market was just going nuts. It was just it was in that like when ES crashes and the numbers are moving everywhere and it's just out of control. And I just look across and I see my P&L, and I'm down 36 grand on a 1 lot. And I'm like, what is going on? And I look across and I realize I don't have a 1 lot. I have 100 lot of gold futures that I shorted. And, now it's like that slow, like, okay, it's clearly a mistake. It's the broker. Something's wrong. I'm not down. Why is there it's so slow motion? Deer in headlights. What do I? Is this real? What do I do? And the market's just going nuts. The algos are just going nuts. And every second that goes past, I'm like losing 10 grand, up 5 grand, down 10. Like, it's horrible. And I just kind of hit the kind of just get out, which of course does it at market prices. So there's me just flooding the market with buy orders, just buying back these short gold futures at crazy worse. I'm getting out at progressively worse prices. And, literally this whole thing took about 5 minutes to unfold, and I ended down 56 grand in like 3 minutes.
Wow.
How
and
yeah.
And I, it's like I'm sitting there for 5 minutes staring at it, going, "What?" It
Kind of like shock, like
yeah, and it was, and so I guess I need to get on the phone to the brokerage, and they're all East Coast based. It's midnight my time. It's 3 a.m. their time. I'm chatting online with someone who, that I was like, do I go to bed? What am I going to tell my wife? I just lost 56K in 3 minutes. Good one. And I'm making a little bit light of it now. I mean, it still haunts me, but it was just this unreal moment. And I just stayed up all night waiting for someone to call me back, because seriously, I was pissed, because it was the brokerage. It should have defaulted to a 1 lot, and it did 100 lot. Now it's my fault because I didn't see that it did 100 lot. Anyway, eventually someone called me back, and in their great bedside manner, it was like, oh yeah, this happens all the time to people. And it's like, people, traders, I see it all the time. People wipe out and this and that, which is not really what I wanted to hear. That was not the bedside manner that I wanted.
Exactly.
He was all very blasé and matter of fact, which makes sense. He probably does deal with that all the time, where people just blow up and stuff. But that didn't make me feel any better, and so that made me a bit irate, and I was blaming them for their software. And anyway, I couldn't prove anything, and they couldn't prove anything, and I knew deep down I had to probably suck it up, and that was just the way it was. Whether it was truly my mistake, whether it was their mistake, I couldn't do anything, and I couldn't trade for about a month.
Yeah, and when you sign those brokerage forms, they do have about 3 pages of font that you literally need a magnifying glass to read.
Yeah.
And basically, because I mean, I worked in the industry. Um, we don't take hits, right?
Right.
It's just like, basically it says you sign up for this.
Mm-hmm.
We'll try, but if we slip you and you lose a little bit, you gotta tough, tough luck,
Yeah.
right?
Yeah, and
And
it could have gone the other way, right?
yeah,
I
could have
could have made
exactly,
50 grand and then called
exactly.
myself an excellent trader. I don't know. But yeah, I mean, that was a I'll say it was a turning point. I was devastated.
Oh yeah,
I could not trade. I stopped for a month, and that was tough to recover from. But
What,
not
what,
just financially, but I mean, and I remember I stayed up that night, dealt with the brokerage, which was no comfort to me. And my wife got up and she was like, "Why didn't you come to bed?" And I'm like, see, funny thing, and complete credit to her. She hugged me and was like, it'll be fine, and this and that. And
wow,
yeah, I mean, hey, um, one in a million. But
yeah, definitely.
I, after a month passes and you're not trading, and it's like, well, what are you going to let this defeat you? Are you going to,
Oh
it,
yeah.
is not trading going to be the solution?
Oh, exactly.
So
Yeah.
you get back on the horse and you do start small, and I have never traded gold again.
Yeah.
Um,
Uh,
but I went
that
back to my core strategies that work and grind it out and grind
mhm.
it out, and you get your confidence back and you move on, because what are you going to do?
Exactly. Exactly. It's funny that you say this because the reason I haven't traded options is once in 1998 on the trade desk, my idiot partner, right, let one of our clients buy 70 grand worth of options in an account with no money in it, right?
Yeah.
And my
Mhm.
partner was the options principal of the firm. And of
Wow.
course, he doesn't show up for work the next day, right? So I walk into the office, my boss is literally standing on my desk screaming at me,
Yeah.
right? And that was before we had software, right? So
Right.
I'm trading with Knight Trimark on the phone, right? And I don't know what the hell I'm doing. And I said, you know what, goddess of order flow, if this works out and I just lose 5 grand, because brokerage firms don't pay customer losses, you
Right.
pay, the broker pays.
Right.
So I'm like, if I lose less than 5 grand, I'll never touch this stuff again,
Yeah.
right? And I got out flat, right?
Wow.
And it was just luck. And the guys at Knight Trimark, that got bought by Virtue, they really helped me trade out of that position. My market
Yeah.
makers, they got me on the options desk and they got me out of it. But Jesus, it was, and that's why I haven't. Now I'm just venturing back into it, because we have you in the room now, and I'm like, okay, all right, it's been 30 years almost. I can, you know,
Yeah.
I'll
Well,
look at this again, you know.
again, it's about, I would never. I mean, it's not that I don't buy options. It's just, you've got to understand when to buy options
Exactly.
and when to sell
Exactly.
options.
Yeah.
And 70, I mean, I don't know if that was a big trade. I mean, it's a big, I would never ever go, you know, sometimes
Ah,
sometimes a one lot is big for me, and it depends what it is. But I tend to
well,
trade pretty small,
yeah.
um, to again grind it out, because I don't like a lot of risk. But yeah, it's about understanding what that really means, and
Yeah.
what the risk is.
And this is the guy who's responsible for the risk of the firm, right? This is the kicker, right? Yeah.
Yeah,
Anyway.
there's a lot of ironies in there for
Oh,
sure.
no kidding. Yeah.
But
yeah, shout out to your wife.
yeah,
Exactly.
That's
Yeah.
incredible.
you'll
That is.
you'll meet her in Vegas. She's coming out with me.
Yeah, I can't wait. It should be interesting.
Yeah,
I'm gonna lightly mention her during the presentation, and maybe some of your guys nightly trips, I guess. But all right, let's see here. I want to wrap it up here soon, Steve.
yeah.
What traders did you have any traders when you first were embarking on this that you looked up to, present, or I guess
Yeah.
who's past?
Well, it's interesting because a lot of the people I learned from are actually probably speaking at the conference next week. Like John Carter, I learned definitely some interesting things from Tom Sosnoff, the whole tasty trade thing. Peter Resnicek, I really, really appreciate. And again, it's interesting. His style is quite different. It shares some similarities, for sure, but he's much more technically. He's much more of a charts person and a technical trader, and I'm really just not. But I appreciate his perspective. And again, he's all about market profile as well, which makes a lot of sense to me. So yeah, I mean, there's definitely a number of people that have influenced me both ways in options that I look up to, and again, eternally grateful for just Peter Resnicek making me listen to the Confessions podcast in the first place, and that you guys resonating with me the way you talked about trading. It was like, wow, this is one of the first things I've come across that feels real, quite frankly.
Awesome. Shout out to Peter. That had to have been I'm pretty sure our first guest, JJ.
He was.
And I did not know a goddamn lick about trading. I feel like,
man, you have like in those 2 years, right? You have like progressed at an exponential rate, and it just shows because he came from a poker background, so at least he had the risk management.
Yeah.
Right.
Yeah.
And then he just put the knowledge together, and he's just cooking with gas right now.
Yeah.
And we love Peter. That man took 40 points off my blood pressure.
Yeah.
By showing me market profile.
Yeah,
wow,
I can imagine.
Opened my eyes. Yeah.
Yeah, very good guy and interesting guy. He's got a pretty dry sense of humor sometimes as well, which I personally appreciate. And yeah.
Just Peter, be careful on that electric skateboard.
All right. Please
the
be
hoverboard.
Careful.
Yeah.
Please.
Yeah. All right. So some miscellaneous stuff here. Steve. So biggest cultural difference would you say between Brits and Americans?
Biggest cultural difference. Some of it's the humor for sure. I have to be careful.
Well, are Americans a little bit more face value, right? Like, like hard on their sleeve. Like,
yeah, and there's a difference between East Coast and West Coast. I'm a bit more West Coast. I find a bit more relaxed and a bit more chill. East Coast, I mean, I love going to New York City because I find people so rude. It actually has the opposite. I find it so, I won't say hilarious, but kind of, it cracks me up that I'm just walking down the street and someone's barreling towards me. It's like, get out of my way. And it's like, wow, that's kind of almost so comical to me that I appreciate it. Yeah, so there's a sense of humor, sometimes a brashness depending on the coast. I think a bit more upfront. We're more, I think, genetically, with a lot of exceptions, reserved, self-deprecating. I like to be self-deprecating. That's part of my whole thing. I do remember when I first moved to California, this isn't necessarily a cultural thing, but it's a language thing. I remember distinctly being in a very busy lunchtime McDonald's situation. And I was in California, just, lines were long, and I got to the front, and, people aren't expecting my accent. And again, it's funny, I come from speech recognition, so it's especially an interesting thing for me. And I remember asking for a combo number 3, and I always, do hold up 3 fingers just to make sure, because people can't understand my accent. And they got that, and they were like, do you want a drink with that? And I'm like, yeah, Coke. And the lady was like, do you want a drink with that? I'm like, yeah, a Coke. And she was like, oh, well, diet? And I thought, oh, she's got the Coke, because now she's asking me, do I want diet or regular? And I said, just regular. And then she looks confused. Then she said, for the 3rd time, do you want a drink with that? And I'm just like, I don't know what's happening here. everyone's getting annoyed behind me because it's, fast food. And the guy right behind me just kind of leans over from behind and said he wants a Coke. And she was like, "Oh, Coke." And she goes to get, and it was like, I was just, and I'd been in the US for like a week. And it was just funny to me that and again, back to probability. How many drinks do they have? They have 6 drinks. They had Mr. Pibb. They had High Orange Sea.
Mr. Pibb.
What sounds like Coke?
Yeah, let's
Out of those options, if you were going to pick one randomly, or based on the thing that kind of sounds like Coke, even if you didn't really get it, what? Anyway, it's just it was. I mean, it's not really a cultural thing. That was more of a
yeah.
Separated by a common language and that whole thing.
Yeah, it's like, yeah, come on, deduce here, right? Not many options. It's hard. I don't know. It's tough.
Yeah.
It's tough getting trying to understand and get along with what do we? I call them normies now. I've been. I say that. I say that.
You mean the magical thinkers?
Yes. Yeah. Nah. It's interesting. That's why it was funny. Even when we all met up in Vegas, Steve. I'm sitting there like looking around, and like even like yourself, right? From England. We had people obviously from the US. We had people from South America. Shout out to Frederico.
Yeah.
We had, Canada in the building, like, and people that we probably all never would hang out. Like, what would this group of people be together other than like we all trade and like, but we could all like different age groups, different ethnicities, but we could all like relate to each other and talk and understand each other. And so I thought that was interesting because like it's hard. I mean, at least I know for me, it's sometimes it's hard like relating to quote unquote normal people who have normal jobs who it's just we're in a different realm, it seems like.
I mean, I do have to be careful with non-trading people because I get a bit passionate about it sometimes, and I start talking about it because they ask and they probably wish they hadn't, because then I start going off and it's the eyes glaze over and they don't care. But yeah, it's.
I just got to be careful talking sports with people because especially like betting and like like that guy, your average bro is gonna be like, oh no way, this team's gonna win.
Right?
No way.
Yeah,
I'm like, you should no way. Like and I've won a lot of bets that way. Just like I mean, but these people don't even like betting, to be honest. It's hard even getting fucking $5 out of these people. But it's like, oh, you sound so sure though. You sound so sure.
Right.
Are you sure you don't want to?
Yeah, and again, for me, it comes back to. When do people? We're all, I'm not infallible. When is a win luck versus due to a strategy?
Yeah.
And I think again, that's a hard thing to, I can bet on something just because I like the team, and it wins. Well, that was luck. That wasn't, probably anything else. I don't sports bet, but that's how I would do it. I would do it for fun. I go to a casino. I gamble the exact opposite way I trade, which is funny because you probably gamble how I trade, and I gamble how I don't trade and how I shouldn't gamble, quite frankly.
Yeah.
But it's a different thing. I mean, I'm in the mode. I mean, I'm not in the mode that I'm going to win the jackpot. I'm going to change my life. If anything, I'll change it for the worse. On average, for sure, because over time I'm going to lose, and I know that. But that's, I'll have the same. I'm not going to put all our life savings into a slot machine. Yeah. It's going to be play money, and my expectation is I'm fully not going to have any of it at the left of this session. That's my mindset going in. Trading, you don't want to have that. Some people are effectively doing that same thing in trading. I have completely the opposite approach in trading, which is interesting to me. So, I probably shouldn't gamble like I gamble. Not that I gamble big. It's just fun. It's
just fun. And I wish I could have more fun because I take it too serious. I can't.
The business. Yeah.
It's always is. I don't know if I just ingrained that into myself. I can't go into a game knowing I'm getting the worst of it. It's a problem. I don't think I'm like, why can't I just go and have fun at the casino? Because like if I go with people, I'm like, maybe I'll just have a couple of drinks. I'll watch you, or like, or I'm gonna go to the poker table. Like I can't just like go and just have fun and willingly like, no, I'm gonna lose my money.
Right. Yeah, it's interesting. Just everyone's different.
That's probably just my competitive. Yeah, I'm just like, I want to win at it.
Yeah, I mean, it makes sense to me that's how you would train. That's how you developed.
Yeah.
So.
Yeah. Okay. So I want to ask you this. So before you're coming to America, right? So staying on this like British American topic, like what was one of your biggest misconceptions about Americans before coming to America?
That's a hard question. Well, I would say, I mean, this is definitely related to that. I mean, the not to use magical thinking, but the kind of stars aligned. I always had this vision of, wow, it would be really great to come to America. I, grew up when Baywatch was on TV. So at that age, and actually, my diet was Miami Vice and Baywatch to some degree, right?
Miami Vice.
And yeah, Crockett with his cool looking suits and no socks and white suit and his Ferraris and stuff. You're like, wow, that doesn't happen in England. You don't see
exactly.
Now I know that doesn't really happen in America to a large degree. I mean, it can and it does, but it's not like, that's not the norm. That's not the thing. So I saw all this glamour and I saw, wow, in California, probably, I guess everyone just goes to the beach every day because why wouldn't you?
Exactly.
And so, but I was 14 or whatever, 15. So I had this vision in my mind of, at some point, I would love. I didn't see a path to doing it, but I would love to move to America, and even I remember when I did eventually move to America, I still had a little, and I happened. I mean, the company I was working for, the speech company, after I graduated, the ones, I went to Malaysia for a bit and I ended up in California. They opened an office in California. It was like, I remember thinking that dream I had from several years ago, it's sort of becoming true randomly that this very small company, I mean, they were a small 80-person company, opened an office in California. Not only did I had only really just joined them, but a few months later, my manager said, hey, I want to send you to California. It was like these things just kind of happened randomly. And I was like, yeah. And I remember hadn't been in America long, and I was talking to someone and saying, I can't remember, we were talking about, hey, should we go to the beach? And I remember her saying, do you think we honestly, and she was in San Francisco, she was like, do you think we just go to the beach every day? And I was like, I don't know, kind of. Yeah. So, and she was just laughing at me. Yeah, I mean, and there's a bunch of things like healthcare where, I come from a country where you don't think about healthcare because it's all government paid, and, when you're ill, you go to a doctor and they'll do something or not, and, whatever. And I remember my very first job, I got all this slap of paperwork and you have to pick your healthcare plan. And I was looking through it and I was like, I don't know what any of this means. And there was the premium, there was the Cadillac Eldorado plan, and then there was the set of steak knives / you're fired plan. And, one was catastrophic and one was, and it was like back to my probability. I felt I had to figure out what's my probability of dying from something catastrophic versus I'm paying more for that plan versus this other thing, back to the kind of probability.
Yeah.
And how do you make that decision? Like, I have no basis to make that decision because I don't have the data. And so I don't know if that's a cultural thing, but it's just a very interesting, there was a lot of learning, driving on the wrong side of the road. And, my very first week, I had to fly to San Diego. I had to drive up to LA, 8 lanes each side of freeway. There was no GPS back then. I've got a paper, map and it was just nuts,
Yeah.
just crazy.
How?
And my very back to the culture. My very first, I was kind of a tech guy. I was turning up to in Southern California, in San Diego, and in England. When you're going to visit a customer, you wear a suit and a tie. So I dutifully brought my suit and my tie over to the US, and I turn up to this engineering company in my suit and my tie, and the guy that I was meeting, first thing he says is, he thought I was a sales guy, not like this guy come to help him. It was like, I'm just going to cut that tie off because you need to dress down. So you learn, it takes time, but you learn to blend in. You start to watch Seinfeld, and you start to go, okay, now I know what everyone's talking about.
There you go, Seinfeld. Yeah, that's some California shit, huh? It's too much. Well, so how much? We'll end on this, because I always think this. And JJ knows, I'm pretty grateful to be in Florida. I didn't grow up in Florida, and I really appreciate the weather. And I think it definitely, especially the winter months, I think it has a big impact on your mood. Like, have you noticed that, like, when you were like in England and going to California, and not in Seattle, but
well, yeah, Seattle's basically the mirror image of London.
Yeah.
So I mean, and that's okay for me, because it doesn't particularly affect me. If it's gonna, we actually get less rain here than probably New York City, I think, if you look at the stats, and certainly Atlanta or somewhere like that. But we've got that. It's probably similar to Vancouver, JJ. It's that overcast.
Oh yeah.
It day after day. It never gets really too cold, but sometimes it gets a bit too hot. But 2 weeks a year you need air conditioning. Rest of the time you don't. It's pretty stable, but you get used to that. Yeah, California, Northern California, I was in for the most part. I found it to be the perfect climate. You wake up, blue sky, pretty much every day. Yeah, definitely makes a difference to the mood. I do miss that a little. Yeah. I have to admit, but I like Seattle. It feels definitely. It reminds me of England a lot more, to some degree. We don't have a Space Needle in London, but there's similar structures. But yeah, and I don't get back to England enough. I would say one of the things, the level of service in this country is amazing, and the choice you have. You go to a supermarket, you could buy whatever cereal, whatever color, whatever, and they're probably open 24 hours a day, and you can just do it. In England, it's like, well, there's 2 boxes, and by the way, we're closing in 5 minutes, so hurry up about it and get out. And I'm kind of kidding, but I do remember being used to having been here for a few years. I was used to that level of service where people fall up. You walk into a store and suddenly, can I help you with anything? I'm like, I don't know. I just got here. It's like, wow, back off and all that kind of thing, which is funny. And in England, it's more like you walk in and they're like, we're just hurry up because I'm going to close in 10 minutes. So, hopefully you won't buy anything and trouble me with your purchase, kind of attitude. I remember being in a pharmacy in England, and someone was stacking the shelves, someone who worked there stacking the shelves. And I was just browsing for something nearby. And a lady came over to her and said, oh, where do I find the moisturizer or whatever it was? And the person who was stacking the shelves, who worked there, kind of gave this big kind of sigh. You could tell. She was like, and said, you know what? They keep changing things around in this store. Even I can't find anything. And then just went back to stacking her. And I was cracking up, because that's the England I know and love. And it's just 180 degrees away from the level of service you get in the US. So those kinds of things I kind of have a comical appreciation for.
Yeah. Interesting. All right. Well, I think we'll end it on that. That will conclude today's episode of Confession of a Market Maker. If you guys enjoyed the episode, please like it and leave a review. If you'd like to join a professional supportive trading community, you can join us at microefutures.com. Steve, let the people know where they can find you and anything else you want them to know.
Sure. Well, they can definitely find me in the trading rooms. Also, I have a site, Options Savvy. That's 2 S's, optionssavvy.com. They can check out the training that I've got there if they want to learn more about options. And that's pretty much it. Thank you for having me.
Yeah, our pleasure. And if you guys are in Las Vegas, what date is it?
Well, it starts the whole thing starts on the 24th, Thursday, and then we're talking in Vegas on the 26th, Saturday the 26th.
The 26th. All right. So if you guys were there that weekend, like 24th, 26th, anywhere around that time period, we're going to be in Vegas. Hit us up, message me on Twitter or wherever. We'll be in Vegas. Would love to meet up with anybody. So JJ, any parting words?
Oh, thank you so much for being with us. Really, this is great. Really looking forward to the work you're going to do with our folks in the room, and just really, it's nice to have someone. You can always tell when someone's explaining something. You know, they know it. It's clear. They can explain it in a fashion where people can understand it, and that's what I always like about trading education. Educators who do that.
Yeah,
It's
there's a
great.
lot. Like I said, there's a lot of bad stuff out there. I try and come at it from put myself in my shoes when I was learning. Like, it is complicated. How do I break it down? So appreciate that, JJ.
Oh, that's great.
Yeah. And so for Steve Hedge, I'm Paulie Walnuts. He's the gorilla of House Street. You stop, so.